start.
Silva, it is live?
Live, sir, we can start.
Yeah, thank you, Silva. A warm good evening to all the viewers of today's session, as well as my warm welcome to the speaker of the session, CA Maheswara garu, and viewers of the today's session. A pleasant good evening to each one of you. Today's topic, Investor Awareness Program, Collective Investment Scheme and Small Investor Grievances. What are all the redressal mechanism is the most important topic, I can say. Investors are the backbone of the securities market. They not only determine the level of activity in the securities market, but also the level of activity in the economy. The growth in the members of the investors in India is encouraging right now. The trends reveal that in addition to the FIIs and the institutional investors, small investors were also gradually beginning to regain the confidence in the capital markets that had been shaken consequence to the stock market scams during the last decades. Right now, however, many investors may not possess adequate expertise, knowledge to take informed investment decisions. Some of them may not be aware of the complete risk return profile of the different investment options. So how the investors has to take care of their investment, and what are all the do's and don'ts the investor equity, as well as how to deal with the investment options. I think today's speaker, CA Maheswara sir, will deal. It's my privilege to introduce today's speaker, CA Maheswara sir. CA Maheswara is a postgraduate in commerce from Nagarjuna and become from Andhra University. He is also passed CAIIB proficiency in banking. He is a retired assistant general manager from Andhra Bank. He served last the Somajigoda branch of Hyderabad. He did a postgraduate diploma in financial management from Pondicherry University. Freelancer in academic side at Andhra Bank Staff Training Centers, Vizag, doing auditing closely with the CA firms in Vizag. He is also associated with the tutorial of competitive examinations. He is actively participate in Lions Club, that is region chairman Lions Club Visakhapatnam district 316A, active in Vasavi International for district 201A, secretary Visakha Investors Welfare Association. He spends his most of time in dealing with the present day dynamics of banking, stock market and economy, and follow closely the changes in those sections. He regularly invests in stocks. He used to spend time on reading of books, magazines and papers to keep himself updated with the latest rules and regulations of the banking, stock market and other sectors. With this brief profile, I present to today's speaker, S. Maheswara Rao, to the viewers of the today's session. Sir, the screen is yours. You can present your session, sir.
Sure. Thank you, Mr. Chengal Reddy. I am very happy to address all the viewers. You have given a very good introduction of me, and thanks for the same. And I also thank the SIRC of ICAI for giving me this opportunity to speak or share my experiences with all the viewers. That is the most important thing, because nowadays, because of the books, papers and journals, everybody knows something about the stock market, and there are a lot many things to be known by each and every one of the investors, merchants, public and all other financially related persons. So out of this, today's topic is Investors Awareness Program. How to prepare safely for investing in the stock market, not only in the stock market, for the other things also. So first, please, next slide, please.
Sir, is my screen visible, sir?
Yeah, visible.
Yes, thank you, sir.
Next screen, please. So, stock market is a ocean lakhs of people invest in this stock market, thinking that the profits or advantages are many in this stock market. To highlight the Bombay Stock Exchange, it is almost 150 years old. So since then, stock market operations are going on in India, and many number of investors, I can say some thousands of members, they are participating in the BSE transactions daily. Earlier it was fully manual. After 2000, the NSE came, and now it is fully digital. So because of the digitalization, everyone in a nook and cranny of the world and India, people are having access to the stock markets. So naturally, the flow is more in the stock market. Naturally, the risk is also very high in the markets. So, basing on these all these things considered, our government of India, with the help of Reserve Bank of India, they said we want to collect small savings from the public, and we, on a collective basis, we wanted to do trading in the stock markets, and give the profits or distribute the profits to the public. With that idea, they have started one mutual fund. The first mutual fund known to Indian people is Unit Trust of India. Unit Trust of India, it was passed in the Parliament in '63 and came into operation in 1964. So from then onwards, Unit Trust of India was doing a lot of service to the public, and particularly small savers. Then what is their duty and what do they do in the Unit Trust of India? They have opened one ULIP 64. That was the first maiden mutual fund purchased by all the public. And later on, the same is almost called master share. With the master share introduction, people used to subscribe to the master share, and daily we used to see the paper about its NAV, net asset value, etc., and either purchase more number of units or dispose of the units available with us. So, what I want to say, the first one is, what is a mutual fund? This I want to clarify. Mutual fund means this is a collection of small savings from the public, and keeping the same with the help of portfolio managers with some of the organizations where the profits can be accrued. There are so many mutual funds nowadays. They are plenty. Some mutual funds are equity mutual funds. Some mutual funds are debt mutual funds, and some are liquided overnight, large cap, medium cap, etc. I will tell one by one what are they. And some of them are tax saving also, and they are linked to medical insurance, and everything is there in the mutual funds. Basing on the characteristics of the mutual fund, it is called debt mutual fund or equity mutual fund. Both are almost the same, but for the investment decision or investment direction of the mutual fund. Next, please. Next slide, please. Okay. Then, what is meant by equity mutual fund? So, the mutual fund, whatever amount is collected by the mutual fund authorities, they put it in the equity of the companies only. Their main concentration will be on the equity. So whatever profits companies earn, they share it with the units, and ultimately the units will be given to us along with the profits earned by them. That is equity. Whereas some of the people, because of their risk perception, they may go for debt mutual funds. Debt mutual funds means most of them are debt oriented, either in government bonds, securities, or convertible debentures or non-convertible debentures, whatever is, that is linked to the interest rates of the debt instrument. Again, that is called debt mutual funds. There is the third one nowadays very popular is liquid or overnight mutual funds. These are helpful to the organizations where they have surplus funds temporarily. they may have 10 crores today, and day after tomorrow they require the funds. For 2 days or 1 day, they can keep the same in the liquid funds, and whenever they need cash, immediately they can encash. And in the meantime, they are getting some 2-3% of interest calculation on the liquid funds. The same is the case with overnight funds. That means every day evening we will see what is your balance sheet, what is the liquid cash, either in the cash or the bank balance. They transfer it to the overnight funds, and the very next day they can take back. That is the liquid or overnight fund. And if they invest the mutual fund amount in a large cap companies, it is called large cap, and the same is the case with medium and small cap. And for tax saving also, there is a scheme, tax saver scheme. Under Section 80C, everyone is eligible for 1,50,000 as per old scheme. So up to that 1,50,000 rupees, anybody can save under this tax saving scheme, but they have to wait for the minimum period for holding the same, and then afterwards they can get back the amount. So this amount, the mutual funds, what they have done is, they did not say 1 rupee or 2 rupee. They say these are all converted into units. So any amount of investment, they will be converted into units, whether 10 rupees or 100 rupees. It is called a unit. So for every unit, yes, if I want to invest 100 rupees, they purchase 10 units in my name and keep it separately in my name. Of course, not in the name, in the folio. In the folio, my 10 units will be there, and they will be doing business. If they get profit, they share it. Ultimately, my units value will be increasing. Next slide, please. Salva, please. Next slide.
Slide has been changed, sir. Actually, myself, Monica here. As my change slide has been come there.
Okay. Please go for the next slide.
Sir, okay. Sir.
So, Unit Trust of India, this is the first collective investment scheme which is registered by the Government of India, sponsored mutual fund, namely Unit Trust of India. The management was shared by Government of India and also the RBI. And it instilled confidence in all the public and investors, and it was a roaring success after introduction of Unit Trust of India master share in the market. Of course, there were some black marks in the master share history also. Up to 78, it was running the show, and after 78, it was delinked from the RBI and the IDBI and took over the regulatory administrative control in place of RBI. At the end of 88, UTI had 6,700 crores of assets under management. So, what is assets under management? That is the total amount available with the as a corpus is the mutual fund minus whatever liabilities are there, we deduct, and the net amount is the assets under management. It is popularly called AUM. That AUM gives the core subject of the total amount available with the AUM. The higher the AUM means they have more funds to deploy in the market. Lower the AUM means, yes, they have limited funds with them. It is better called, it is the aggregate market value of the investment it holds in its portfolio. This is the yardstick to know the volume of funds collected by the mutual fund. So, whenever we want to compare the mutual funds, we see, yes, the AUM of this particular fund is very high. So, they have more capacity to invest in the various companies as an equity or a debt or purchasing of the shares, etc. So, AUM is the yardstick for deciding which is the big mutual fund or a small mutual fund or the mutual fund status we know. For example, this SBI mutual fund, as on 28th February, they have 6,37,000 crores of rupees with them. Once again, I tell 637 thousands of crores they have with them for investment in the stock market. That is the topper. SBI mutual fund is the topper in the AUM. Next one is ICAI mutual fund. That is also almost having 4,63,000 crores of rupees with them. So with these funds, they can do wonders in the market. Again, the third one is Hdrc mutual fund. It is having 4,26,013 crores. And fourthly, Aditya Birla 2,91,000 crores. They have funds with them. They invest in the stock market, get the profits, and distribute it to the public. So, what is that I am getting after investing 10 rupee as a unit in these mutual funds? How much I am getting? Is it commensurate with my patience, waiting, or the market, or the economy? So these are all, yes, they are all there. We will know exactly what is the value of that particular unit which I invested 1 year back or 2 years back. Then they have to calculate one NAV, that means net asset value. Of course, at least for CA people, I need not tell what is NAV. NAV is nothing but net asset value, just like our net reserve or net worth, like that. So net asset value represents the net value of an entity, and it calculated as the total value of the entity's assets minus total value of its liabilities, and most commonly used, and divided by the number of units. I told you already, whatever investment is made in the mutual fund, they are demarcated as units, 10 rupee units. So my 10 rupees, if it is having 12 rupees after 1 year, I can say, yes, my mutual fund is functioning very well, and I am getting 20% return on this 10 rupee unit. If at all, if it is 11.5 rupee, that means I am getting 15% per annum growth of my units. So in that way, NAV decides which mutual fund is functioning well and which mutual fund is going on an average system. If I want to invest, if anybody wants to invest, they will see what is the NAV of this particular unit, whether it is going up or it is going down. What was its value last year and what was its value this year? So basing on that, we may go for investment in that particular mutual fund. Of course, there are some, again, I tell you, some black spots. In one of the mutual fund, they heavily invested in a particular company. Most of their funds, they have invested in a particular company, and ultimately, company could not run the show, and they have closed it. Almost its value has come to zero. Naturally, the mutual fund also expressed its ability to service the units, and the unit values also has gone down remarkably. So when they want to invest these mutual funds with the help of this portfolio managers and other experienced persons, they invest in stocks basing on their performance, basing on the strength of the company, or comparing the company with the peers company, and they will decide as this company is good, the mutual fund can invest in this particular company. And every fortnight or every month, you can get the portfolio. What is the portfolio my mutual fund is investing? Whether they are going for large cap units or whether they are going for small cap units. What are that? What is the amount I have invested that is going to a particular sector or particular company? So during the COVID time, yes, most of the companies and in the stock market as an investor, we have invested substantial amount in pharmaceutical companies, thinking yes, they have very great future. That was one of the idea. And some of them think, okay, it is not so. I want to invest in infrastructure companies. So that is also good. Like that, the portfolio managers of the mutual fund, they invest their funds available under AUM in different sectors and different companies. Basing on the returns, yes, basing on the available profits, etc., they distribute the same to the unit holders. This is the main thing. But in the case of Dewan Housing Finance Limited, it attracted a lot of money from Templeton, Franklin Templeton Mutual Fund. Ultimately, because of some negative points of the Dewan Housing Finance, it was has gone to liquidation, and ultimately the mutual fund where the heavy investments are there in that particular mutual fund, it has also faced losses. That is Franklin Templeton. Of course, slowly they have recouped, and afterwards they have paid some amount for the schemes invested, collected by the Franklin Templeton. 6 schemes they have tried slowly. They have returned the money, but till then, yes, everybody is worried. What happened to our money? We have invested a lot of money. Yes, with the idea of getting some profit, whether it is a profit or at least to the extent of interest portion, they are expecting, but it could not so. But slowly they have recouped the losses, and they have paid the funds to the unit holders. Then how do you calculate the NJV? I told you. Then how do my account is there in the mutual fund? Mutual fund, as I said earlier, every investor will get a folio. In that folio, that customer ID will be given. Basing on the customer ID, you can invest any number of units, any scheme of the mutual fund, any number of years or any number of months. But for every scheme, they will have net asset value, and basing on the net asset value, you will rate them under basing on their performance. For example, if I want to know my position, I will see yes, with the help of the business and newspaper, every Sunday they will be giving the net asset values or the AUMs of all the mutual funds. There are some hundreds of mutual funds, schemes, etc., including schemes. You can go through last but second or last but third page. Entire pages will be given for mutual fund. Yes, what is the mutual fund latest position? How much they are having? What is the net asset value of the particular mutual fund? Of course, other papers also give, Economic Times or Financial Express. They also give, yes, this is the latest value or this is the latest NAV of the mutual fund. Because of that, yes, I know my mutual fund is performing well. I can safely go for my sleep. Otherwise, yes, if there is any problem, I will check into that particular thing, and I will do some alterations in the schematic finance. So, if I have number of folios, I am unable to look at them, and I am unable to maintain them in my files. Then, Government of India, they have introduced Demat account. Demat account means dematerialized securities account. It is rather. So, with the help of Demat account, I will put all my shares, securities, bonds, etc. in a single platform. That means whenever I open my Demat account, I will know what are the shares I have, what are the stocks I have, what are the debentures I have in my name, what is the latest worth of the investments also. Daily you can open the whatever Demat account you have, you can log into your Demat account and see that it is going up or going down. It may be this way or that way, but I am informed fully about the present position of my stocks and investments. So then what is a Demat account? Demat account is nothing but a statement of my investments in a particular company. That means I have Tata Steel shares, I have Reliance shares, I have Hero Motocorp shares. So many shares are there. Just like that, I have some government bonds or debentures issued by A-grade companies, AAA companies. So all these things, they all put into one place, and on a single paper, they will issue as these are the investments you have in the following company, and the shares are this many number of shares, and what is the present value of the same thing. NSDL, CDSL, with the registration with them, all these companies, so many Demat account, DP, I can say, depository participants are there. Stock holding, Zerodha, Angel Broking, Kotak. Nowadays, all banks, they have subsidiaries of mutual funds. So naturally, they also maintain dematerial form of the investments and securities. So this Demat account gives you entire information of your investments. Earlier, it was done in a physical manner. That means whenever I want to purchase a share, they used to give me a certificate. A4 size or A6 size, they give me a certificate, company name, my portfolio, my folio, and certificate number of shares I hold. If I want to transfer them to any other person, on the reverse side of the share certificate, I used to sign and send it to the person who bought it from me. So they will send it to the company and they transfer it to their name. After transferring in their name, they are the holders of the securities. That was the earlier system prior to introduction of this Demat account. After introduction of Demat account, what happened? I need not give any certificate to the company or to the person. I open a Demat account with company, any company. I give the certificates to them, ask them to, sir, these are the shares I have, these are the certificates I have. Please make it dematerialized and keep it with you. They charge a nominal fee and they take the certificate, send it to the company concerned, and after getting the veracity of the genuinity of the certificate, they say, sir, your Demat is having 100 shares of so and so company. This is the statement they give. So my 100 shares are now with the Demat company, and whenever I want to transfer it to anybody, I need not go to the buyer. I need not sign the certificate, sales certificate. I just go to my Demat DP, deposit participant, and say, sir, today I want to dispose of 100 shares of so and so company. Please arrange. So immediately, nowadays, because of the digital, instantly I know the rate of the particular share. They say, sir, this is the rate it is prevailing in the market. So if I am interested, I say, okay, sir, to the same rate, you please sell the same. You will sell the same, and automatically my account will be deducted for the number of shares in the Demat account. So all Demat accounts, whether it is a private company or government company or any company, they will maintain the entire list of the shares by each individual. But at the same time, whenever you want to open a Demat account, we should have KYC. You should fulfill the KYC knowledge, like your name, address, Aadhaar card, PAN card, and all these things we have to give it to the DP, depository participants. After getting all this information, they will open a Demat account, and the operations will be easy in that particular company. But the advantage of opening a Demat account with any DP is you can give nomination, not to a single person. You can give it to a more than one person. 2 persons also you can give nomination. Earlier, nomination was introduced in the commercial banks, all banks. They take nomination, and on the unfortunate event of death of the customer, all the deposits are transferred in the name of the nominee. After taking due KYC, they transfer the funds to the account of the nominee. Whereas there it is restricted to only one person per account. Or every account you can have different nominees, but for everything, yes, you can have only one nominee. Whereas in the Demat accounts, you can go for two people as the nominees. So and so shares in favor of so and so shares are in favor of so and so. Nomination is also given, and the nomination will be for two persons. So thereby, first advantage of opening a Demat account is I need not maintain physical shares with me. So they may be theft, robbery, fire accident, losing, something may be happened to certificates. This will be avoided by going to a Demat account, opening a Demat account. The second one is whenever I want to sell these shares, I just instruct my depository participant and ask them to give it to so and so or so and so amount. I will tell them, or at this rate, you can dispose of the thing. They will dispose of, and automatically after T+1, the very next day you will be getting money into a particular account. And a nomination can be given. And whenever I want to see what are my investments, I need not go to my file, open them, and multiply all the values of the shares. Nothing need not be done. Just go to the Demat account, open it, and say what is the valuation of today. Yes, everything you will be getting. This is the latest valuation basing on the stock market prices. So that will be enough for me. And whenever I sell also, yes, I have to pay capital gains. That capital gains, I have to calculate whether it is long-term capital gains or short-term capital gains. I have to calculate and inform the income tax authorities. That also, these people, because the Demat account is having right from its inception, that means right from I purchase the share, they are with them till it is disposed of by me. So they have the information. They will send you a statement of account every year. If you ask your depository participant, they give you one statement showing, yes, these are the shares purchased on so and so date, and these are the dates we have disposed of them, like 1, 2, 3, 4. And if it is less than 1 year, it is short-term capital gains, and if it is more than 1 year, it is long-term capital gains. So in that way, the depository participant will be helping me a lot for preparing my income tax returns also. That will be helpful. Earlier, non-Demat account time, it could not be done. It was a Herculean task. So this is the advantage. One more advantage for everybody who is having shares in Demat form. Whenever there are rights, buyback or splitting of shares from 10 rupees to 1 or 100 rupees to 10, like that, you need not apply directly to the company. They advertise or they say in our board meeting on so and so date, it is decided that we want to buy back half our share so that our net worth, earning per share, etc. will increase. We have liquid funds, lot of liquid funds. We want to purchase some shares in the market, and we want to reduce our capital also. So all these things, you need not look at the business news daily and see who are doing it and who are issuing rights, who are going for buyback, and who are going for split shares. You need not do. That will be done by your depository participant. As long as you have shares in one of the depository participants, the companies collect the information from the depository participant. Okay, Mr. How many shares are there in the name of A? Yes, sir. A is having 100 shares. Okay, as a 1:2 ratio, we are issuing them on the rights. For 100 shares, the depositor can have 50 shares as his rights. Once I exercise my right after paying some amount as a right, they will transfer 50 shares into my account. So I need not again separately apply for rights entitlement or rights receiving or payment, etc. Only thing is, yes, they send one application. I have to fill up that application, go to the bank and pay the amount, and ultimately the 50 shares or whatever the ratio is there, they are created to my depository participant account, I will receive one letter only. Sir, your deposit number so and so, your client account number so and so from so and so DP is created by 50 shares today. This is for your information. So from the next day onwards, my holding will be 100 to 150. The same thing happens for buyback also. Whenever they want to buy back, they say you are having 100 shares. Your eligibility comes to only 4 shares. If you want to offer these 3 shares which was 4 shares, we will give you this much amount. It will be publicized in the newspaper. Yes. If I want to continue with the company, I will not go for buyback. If I want to dispose of my shares, I want to get the advantage of buyback, I will go for buyback. Latest one is TCS, Tata Consultancy Services. They have done buyback when the share was around 3,500 and odd. They have declared we want to buy our shares at the rate of 4,500 rupees per share. They cannot buy the entire shares offered by the customers, but yes, there is a ratio. So every 44 shares, they have offered 6 to 7 shares. That means almost 6 into 60 to 1 or 7 is to 1, it comes ultimately. So I said, okay, sir, you have given me an opportunity for getting 6 shares. I want to go for accepting your buyback. I have offered 6 shares. Automatically, they have taken 6 shares. They have paid the amount due into my Demat linked account. That also can be done by your depository participant. You need not go for any of these miscellaneous services. All these services will be done by your depository participant. That will be very advantage for the investor or the public. So in that way, even huge amounts, whether they are small or huge number of company shares, you have multiple company shares. So all these things can be put at one place and you will be getting on a statement. That will be easy. Nowadays, NSDL is sending every month, they will send you one monthly statement. In that monthly statement, we have all your shares, their worth, and mutual funds. If you have any mutual fund, the information of mutual fund, and the trading information also. How many shares you have sold and how many you have purchased. All these things will be available in the NSDL statement every month. Only thing is that comprehensive statement that we have to apply, or at least you can say, yes, I want to take my CAS, please forward me. These are the, you need not tell the portfolios also, because nowadays we are living with Aadhaar, doing with PAN card. So as long as your account is linked to Aadhaar and PAN card, everything is known to everybody. That means authoritatively. For all authorities, if they want to cull out any information from the institution, they will simply say, you go to so and so PAN card or PAN number. So everything will be at their disposal. In the same fashion, this Demat account almost linked to PAN cards. Basing on the PAN card, every person who is having an investment in shares, stocks, or debentures or mutual funds, they will get a statement of monthly. And in that, you will have the entire information of your transaction in that statement. That is a very helpful statement. Whenever you want to take, yes, you can take the NSDL monthly newsletter. Say, yes, this I want to dispose of, this I want to keep permanently, like that. So what are the steps you want to keep and what are the steps you want to dispose of? You can decide. Yes, always I wanted to say, whenever somebody asks me, where do you expect me to invest? Yes, I recommend always either BSC 30 or NSC 50. They are the shares which are most of them safe investment. I don't say 100%, but they are safe investment for me. The 30 shares which in the BSC are having, all the 30 shares, we can say most of them are blue chip companies. So I need not worry about their existence. I need not worry about their company organization, company promoters, company performance. These are all there in the blue chip companies. Not necessarily BSC, in NSC 50 also, Nifty also, there are blue chip companies. I have to invest, I want to invest in those companies so that my savings are safe with the company. That is the idea of investment. The investment, you can go to any mutual fund organizer and say, I want to purchase so many units. I want to invest this much of amount. Immediately they take an application and do it, this KYC exercise, and they allot this many number of units you are allotted. In the same fashion, I want to go for tax exemption on these units also. Yes, you are welcome. Every month you have to contribute some amount every month. Of course, not necessarily every month. Sometimes you may skip also. So I want to take 1.5 lakh is 86 section 80C exemption. So I want to invest 10,000 rupees every month. So I have to give an instruction to the mutual fund. They will directly deduct the 10,000 rupees from my account and say, one day before the due date, they say, sir, tomorrow we are going to deduct 10,000 rupees from your account. Please arrange 10,000 rupees in your account. On the D-day, they deduct 10,000 rupees. They allot this many number of units, basing on the NAV of that day. At the time of opening of the this mutual fund account, SIP account, I say systematic investment plan, SIP account, the NAV may be 10 rupees 50 paisa or 13 rupees or 15 rupees. But at the time of next month, it need not be the same amount. It may be more or less. Basing on that price only, again they will arrange for 10,000 rupees. This many number of units are allotted. Total units available with you are this many. They give a certificate. They issue a email or message. Sir, yesterday we have deducted 10,000 rupees from your account and we have arranged this many number of units at this rate, and the total number of units are this many. Yes, because SIP you have to continue for 3 years or less than also you can continue. But if you get you want to avail the tax exemption, yes, you have to maintain it. Then your investment as a unit in the SIP system will be increased. But again, it is also natural to go for short-term gain or long-term gain on the investments made under SIP also. So everything, whatever you get as a benefit or an advantage from the stock market, we are supposed to pay the income tax. That is, nobody can deny whether it is short-term or long-term. So these are the things for investment in the mutual funds. Then method of investment, as the slide says, monthly schemes as SIP, etc. Or already I am having one mutual fund in debt schemes. Debt schemes, naturally, the debt market is not very lucrative when compared to a small middle class person. Yes, it is 8% or 10% like that. So I want to take advantage of stock market, equity market. I say I invested my DP, sir, the debt market is not up to my expectation. So I want to dispose of some shares, some units of debt or debentures of the debt, and I want to switch over to equity system. Yes, you can do. You can simply give an instruction. They will immediately dispose of the units available in the debt system and remove them, and again invest in the equity system, equity mutual fund. So in that way, you can switch. You can switch any number of times. That is not a problem. But after switching, we have to maintain it at least for 1 year. Otherwise, some cost will be there that will be debited to our account. To avoid that, or if you are ready, yes, you can go for switching by paying a nominal amount to mutual fund. And sometimes we say close-ended and open-ended schemes. That means they offer the mutual fund schemes units in a particular time only. Yes, up to 10th we want to dispose. I want to sell the units of so and so company, and afterwards, yes, you have to. You can have it. You can buy it, but not from the company directly. These are all closed-ended schemes. On particular day, yes, it is closed. They may say time, or they may say volume, or they may say this many number of units we want to sell. Yes, if the company performance is very good, if they are giving net asset value comfortably well, naturally, I will go for it and I will invest in the particular thing. Then, yes, after close-ended scheme, they are available in the market, but You cannot go for, say, from the side of entrepreneur. In the open-ended scheme, yes, anytime you can invest, anytime you can withdraw, anytime you can do, or transferring, switching over, or anything you can do. That is the advantage of this investment. The same thing goes to withdrawal also. Withdrawal means whenever I need cash, I go to my DP, deposit participant, and say, sir, I want to dispose of this many number of shares, this many number of units. He dispose of. What is the NAV on that day? They say this is the NAV today. Okay. Basing on that, I decide how many units I want to dispose of. I will dispose of. I can say you sell 10 units. Fine. Otherwise, I say if you sell 25,000 worth of units, you can sell. So both ways you can give an instruction to DP, and DP will dispose of and credit the amount to the personal account. In that way, I can switch to. But there is one more scheme, just like our SIP, systematic investment plan. It is a monthly plan. Every month you have to pay. Every month you have to invest. Every month they'll take something 5,000 or 10,000 from your account and accumulate the units. Whereas systematic withdrawal plan is also there. After some time, I want to get back my money, but I don't need all the money. So what I do, I say, I give an instruction to my mutual fund people. Or every month you send 5,000 to me. Fine. It can also be done. That is called systematic investment plan. After keeping them with them for 5 years, I say, yes, my tax saver scheme is there. It has completed its minimum time. So I want to get back my tax saver scheme advantage. So every month, at the time of going in, I deposit every month 5,000 rupees. At the time of withdrawal also, every month I get back 5,000 rupees. So to the extent of 5,000, they dispose of some units and arrange 5,000 rupees to me regularly till the total amount is exhausted or till I give an instruction. If I say for 1 year you give like this, they give you 12 installments of 5,000 rupees, or no, I want to go for more. So it may be 24 months or 36 months, or till it is the total amount is exhausted in that particular scheme. So in both ways we can do systematic investment plan for depositing and systematic withdrawal plan for getting back money. That also can be done in this particular scheme. That is the advantage of maintaining mutual funds in Demat form and in a digital form, I can say. Then how do you take the services of the mutual fund? They are doing a lot of work for you, and what is the advantage they want to take? Yes, at the time of purchase or at the time of withdrawal, they add some expenses. That is, we call not expenses, we call it load. Load will be added to that load factor. So it is on both these sides. Yes, it is at the time of investment or at the time of withdrawal. We have to pay some fees and commission to the depository participant or mutual fund organizers. So that will have, yes, it is different in different times and different units. Sometimes after maintaining some 4 or 5 years, there will not be any expenses to be deducted. Whatever you want, they give you back. Sometimes they say this much of load is there, so 0.005% load will be there for your withdrawal. So they charge that amount, and with that amount, they will repay back my amount. This is called sometimes front end or back end. Front end means at the time of buying itself, they load it. For example, if I deposit 5,000 rupees in SIP monthly scheme, they give 4,999 rupees, and 1 rupee is my expenditure. And that is front end means. If it is a back end scheme, at the time of taking back my money, they pay me 4,999, and 1 rupee is my charge. 5,000 will be credited to my account. It can be open-ended or closed-ended. Both ways it can be done. Then what are the other things we wanted to know? Yes, I say mutual funds, they are there. Nowadays, yes, there is a problem of heavy investment withdrawal. How do you manage? Yes, sometimes because last year March, because of the COVID, the stock market or BSE Sensex has gone down by 50%. It has gone down to sorry 26,000 from peak of 53,000 at that time. So everybody is annoyed, everybody is worried, everybody lost heavily. Whatever I have saved for the marriage of my daughter, suddenly it has lost its value. 50% of it has lost. So in such a situation, what I do, yes, I want to save myself from this losses. I want to withdraw my amount, at least to the extent of 25 rupees I'll get back. Actually, the value of the mutual fund as per the calculation of NAV, it was 53,000. Take it as BSC Sensex. Suddenly it has gone down to 25,000. So I want to withdraw this 25,000. I want to say goodbye, so that I will be safe to the extent of that 25,000. So my neighbor, he also thinks the same. He also withdraws. So there will be exodus. There will be heavy flow to the mutual fund for withdrawals. In all the cases, what happens? The mutual fund always invest in some company or some bond or some investment. They do. See, everybody wants their money back. They do not have liquid funds with them readily. They have to dispose of the securities in the market and pay you money back. But what about the market? Market has gone down because of COVID. So what to do? They sell at reduced prices only, because they have to pay you the money. If the mutual fund doesn't pay you the money immediately, naturally you will be having, yes, this mutual fund, I am suspecting some foul play is there, or this mutual fund is not able to service the customers, or this mutual fund has incurred so much of loss. All these doubts will creep into our mind. So the same thing happened to the mutual fund organizers also, that portfolio manager. How much you have to sell in the market? The market is at 50% of its original worth. So automatically NAV also comes down heavily. So in all those cases, the government said the NAV also goes down, because value of the stocks has gone down. There is heavy outflow is there in the mutual fund. So the value of the units will be coming down in a cyclical way. Today it is 11 rupee per 10 rupee unit. Tomorrow it will be 10. Day after tomorrow it will be 9.5 rupees. Like that, there will be depreciation or depletion of the reserves. So in all these cases, what they say, you wait. I will wait for some time. I will not go and immediately ask them to return back my money. I will wait. Once if I wait for only 6 months, again it has bounced back. Your 25,000 rupees, 25,000 index, BS index, Sensex has gone to 45,000. So only because of hurry, because of my understanding of the market, or because of my necessity, I have withdrawn. That should not have happened. So now I say I want to again go for it. So at that time your NAV will be very again coming back to the previous rate. So in all those cases, to avoid this ups and downs in a very highly liquid this thing, I say swing pricing. They call it swing pricing. Swing pricing means in the case of any selling of shares suddenly, to stop the exodus of the amount or outflow of the mutual fund amounts, they say you can wait for some time and they will again recalculate the NAV and then they will distribute back the money. That is swing pricing. It was introduced very recently, and guidelines also were given by the government to all the mutual funds. So basing on that, our money temporarily, although hypothetically, we have not lost anything. Yes, on paper, when I want to withdraw, there is a loss. In that way, it is a bit complicated affair for common investors. And this, while investing also, the mutual fund owners, they go for so many other things. What is the sector they are investing? What is the business they are investing? What is the future of the particular business? How much it can earn? What is its economic value of the business? All these things they look into it, and then they go for investment in the system. So in that way, they take all precautions to keep our money intact with nominal or gradual increase of NAV. That is the advantage. Then what happens in a bull market and what happens in a bear market? That is the most difficult task for them. Yes, bull market is always, they say, it will be there for 1 year. And whereas bear market is always there for 3 years. Beyond that, they say long term. So when they say long term, yes, in a bull market, it will be having very good times. The investment will be multifold, so number of times. Your amounts are, your NAV also is very high, but for 1 year only. Later on, again, it comes back to its original value. But nobody has expected that the value of the BSE index will go to more than 60,000. We did not expect ever. Almost it was 20,000, 25,000, 30,000. Suddenly it started climbing up. It has gone to 45,000. Again dropped to 25,000 during COVID last year, March 2020. And again now it has picked up. Now it is around again 60 to 63,000 in between. So basing on that, your funds value, your investment value also goes up and goes down. That is the, yes, you have to estimate whether the present scenario is bull market or bear market. If it is a bull market, I can manipulate, I can dispose of, I can switch over the systems, etc. in a span of 1 year. If it is a bear market, yes, I have to wait for more time so that I can invest some amount and I get back my money. That is the regular thing. If it is beyond that, yes, certainly I will say it is a long term. But generally, long term in this stock market, it is 10 years only. Whatever you want to get as profit in the long term, it will be, you should wait for 10 years. For regular income or regular growth rate, CAGR, your CAGR in a span of 10 years will be always advantageous. In a short span of time, yes, nobody can be billionaire. We have seen, of course, everybody, people who are having shares or who are participating in the share market since 80s, they have number of scams in that way. First one is Harshad Mehta. During Harshad Mehta time, everybody purchased shares. Everyone, we can say, everyone purchased shares. The market index was going up like anything. Nobody expected that much of growth in the share market. Suddenly, because of the unscrupulous systems he has implemented in the general ledger balance of Reserve Bank and other banks, it has gone into, again, so many people lost their savings, etc. That was the first shock we had. Another shock was also there through UTA. UTA was, their brand is always master share, master plus, master gain, like that it was there. So when the master share was doing well, they wanted to come to market to get funds. They sold master plus. Master share was doing very well. Master plus they have introduced. So all the people have contributed or subscribed to the master plus. At the time of master plus, nobody is having any expectation on that particular mutual fund scheme. Suddenly, after allotment, so many people knocked my door and said, "Sir, it seems we have applied for master plus. the value of the Master Plus is 10 rupees. We wanted to offer you 25 rupees per each share. It was ridiculous because I only paid the money, subscribed. I am hopeful of getting the 10 rupees share in my favor. But as soon as I got the certificate or the confirmation from the Unit Trust of India, somebody came to my house and said, we want to pay 25 rupees. Nobody on the earth can give you that much of profit unless it is hypothetical or fictitious. But on a test check, I have given 100 shares. So immediately he paid the amount at the rate of 25 rupees per each unit, and I am rich by 15 rupees per unit. I am very happy. So I told my neighbors, this is the way I have done. So immediately the agent of the Unit Trust of India has knocked at the door of my friend and said, sir, your friend has given like this. For 10 rupees, he got 25 rupees. If you want, I will give you 28 rupees also. We have already purchased 1,000 units. Why do you want to give them to me? So he has also given. He has also taken money. So everybody is happy. System is also going well. So for 10 rupees, within a span of 1 month or 2 months, I got twice the profit, twice the face value of the unit. So 20 rupees I got advantage for 10 rupees investment. Fantastic. There is no such investment in the world which gives you that much of advantage or profit. So what I want to say, whenever profits are uncalculated or very high, that means there is some problem in that particular script or particular sector or particular share or something. Something fishy is there. Whatever market says, market, we always can expect 24% growth per annum or 36% per annum. If it is a very good company, it is a fantastic results are there, working results are very good, then it can give you that much only. Beyond that, if somebody promises you, that means something is fishy in that. We have to be doubly careful. So it was over. Everybody is happy. Then UTI has introduced one more scheme. This time it is master gain. So just now in the month of December, I got master share. In the month of January, I got money. Within 1 month, I got money. So this time I want to invest more amount in the master gain. Of course, it is greedy. I am very much greedy at that time. So naturally, everybody is greedy at that time. Everybody invested in the master gain. The master gain got very good amount as a subscription by the public, and unfortunately, the 10 rupee master gain share has opened or listed at 7 rupees or 6 rupees. So all the investors who were expecting heavy profits were lost heavily in the stock market. Not only that, some of them leveraged their portfolio also. So that means they have borrowed money, putting their, at that time, whatever shares they have kept in the bank or kept outside. They borrowed money and invested in the master gain. Unfortunately, master gain was a major flop. The listing was at 6 rupees. Each individual lost 4 rupees per unit, and it was created havoc in the stock market. So stock market always promises you as per the performance only, not as a fictitious or hypothetical frame. You expect 12% or 24 or 36. That is the maximum basing on the performance of your company. No company can earn that much of profits. And if there is a company which earns that much of profit, naturally the next door neighbor will open another company like that and get the maximum benefit out of the market. So always it should be, yes, we should always hope for the best and don't be greedy. Of course, this is my personal experience. I don't say we have to strictly follow this. There are so many masters, doctors in investments. They advise you what is to be done and what is not to be done. Take care of those advisors also. And every day or whenever market goes up or index goes up, there are plenty of magazines in the market. Profit, money outlook, money, profit, business standard, business today. So many papers, money, profit. These are all newspapers. Daily they will be giving you very spicy information. This company opened at 10 rupees and gone to 30 rupees. This company 100 rupees. This like this, and they will show you the examples also. If you invest in Infosys in 1985 or 95, 95 it was there, 95. If you invest 100 rupees at that time, now you are getting 5 lakhs. They calculate. These are the calculations in the game. The gold is also not attractive. If you invest in gold, you are getting only 2% or 3%. Whereas in the market, you get 20%. These are the estimations. Yes, there are some companies which is a jackpot company, you can say. They are all blue chips, but at the same time, some companies are there. They are jackpots. By investing 1,000 rupees at a right time, yes, it fetches 5,000 or 10,000 in due course of time. But that due course of time is called 10 years, not 10 days or 10 months. If you expect the same kind of returns within 10 days or 10 months, yes, again, we say we are greedy. Market will not respond to this as you are greedy. You can manipulate things. Yes, I want to get this much of profit, I can get it. No doubt about it. But there must be a limit for this. And you put threshold. Yes, my unit is 10 rupees. My NAV is 12 rupees. If I NAV gets or reaches 15 rupees, I want to dispose of. It reaches 15 rupees. My sincere request is, I suggest, if you say 15 rupees is all right, you dispose of. Don't wait for 25 rupees. It goes to 25 rupees also in due course of time. But your expectation, your threshold limit is 15, dispose of. Happy. You can say close. Close the issue, get back your money, be happy. But if you want to go for 25 also, it reaches there, but not tomorrow or day after tomorrow. It takes its time. The idea is, many people, yes, it is 15 rupees today, and day after tomorrow or next month it will go to 25. It may not be that much easy for 15 rupees to 25 rupees. The length of time, etc., it is very long. We have to wait for it. Unless yes, there is some particular investment is there, particular company is there, they are minting money. Yes. In such course of time also, you get the advantage. Otherwise, you don't get the advantage. In a humorous way, stock market also made so many millionaires in the market. Whoever comes to market, it embraces them, they make them millionaires. But unfortunately, all these millionaires were once upon a time billionaires. So stock market says, you are a billionaire. Yes, I am a billionaire, but yesterday I was a billionaire. So that is a disadvantage, or in humorous way of telling stock market risks. Without risk, market is not there. We have to study the risk and you invest in that market. Then only you will be successful. Yes. There are so much of time and banks, mutual funds, they are implementing so many schemes for the benefit of the investors. Earlier, whenever we want to apply for any application, we want to send a draft. We send it to the company along with the application of your share. They encash the draft. Drafts are missed. The draft is not received, or my application is not received. And later on, after so many complaints, then they invented stock invest. So money is kept with the bank. They issue on paper. On the paper, they say, just like your draft, this stock invest is for 1,000 rupees. So that will be pinned with the application sent to the company. And the company allots the shares. Then they encash the stock invest. Otherwise, they return back my stock invest. I will go to bank and cancel the stock invest and get back my money. But like that, now they are using ASBA application supported by banking. So bank, you can open a savings bank account, you can keep the amount, and you can apply for all shares. Once shares are allotted, your account will be debited. If the shares are not allotted, your lien on the savings bank account will be lifted. That is SBA nowadays rights, application of shares, etc. You can do through this thing only, SBA only. And yes, not only banks, other agencies also there. There also you can use your SBA and go for this application of shares, mutual funds, etc. So these are the things which I want to share with you. And coming to the other one, before closing, I say yes. Till now, we are dealing with only Indian markets. But very recently, government has opened the floodgates. You can invest in international markets also. Yes. Scheme nowadays, only two companies, that Gift City and NSE, they are opening the accounts for your investment in international stocks. That is there. So slowly it gets into the minds of the public. Slowly they may open, but yes, you have an option to invest in your favorite company in international, for Amazon, Google, Microsoft, all these things. Now all the companies are Tesla, etc. You can invest through your stockbroker or through your this Gift City company, IFSC company. You can invest, and just like your Demat account, they can keep the shares with them, and you can operate the shares in the system. So internationally also you can participate in the market by purchasing your favorite company shares. These are the international this thing. Slowly it will be popularizing due course of time. For the general public also, you can go for it. These are the things which I want to share with you. And last year, IPOs, there were a number of IPOs were there last year. There are IPOs, not mutual funds, but almost 65 IPOs were there in the done in last year, and they have collected more than 1,31,000 crores of rupees they have collected, and out of which this latent view analytics, it was subscribed by 326 times. So when they want to offer for 600 or 700, it was oversubscribed by 326 times. So in that way, it has gone up, and we are also expecting a very big public issue very shortly by LIC of India. Actually, government wanted to do it before 31st March, but for various reasons, because of this Ukraine war and the downward of our BAC Sensex, they have postponed. Up to May, they have enough time to go for public issue. And LIC public issue is the biggest one till date. By selling 5% of their market value, the disinvestment program of the government will be completed. That is the advantage. Everybody is now looking at the LIC of India to go for investment in the stock market. These are the few lines I want to share with you. And if you have any doubts, I will try to clarify them. And in case there are no doubts, we will go one by one. Please.
Sir, as of now, we have 2 questions from the audience. So
Please,
I will
sir.
just share my screen, sir.
Please, sir.
Sir, is my screen visible to you, sir?
Yes, visible, madam. I'm reading it.
Yes, sir.
DHFL enjoyed AAA rating until the last day it was exposed. Basing on such false rating, mutual funds also invested in this NBFC. What is the guarantee for such mutual funds who has invested basing on the rating? Sir, rating is always a risky one. Rating is given basing on the functionalities of the company. What is its net worth? What is their investment? What is their portfolio? What is the customers' reactions? All these things they take and give the rating. Because that NBFC rating was very good, you need not say that was the best company and we will not fail. Failure is always there. If the best company having AAA plus, they may fail. So there is no such guarantee that no company fails. Yes. You know, the best companies also sometimes fail. This particularly DHFL, they have opened at the time of HDFC was in peak. Divan Housing Finance opened at the time HDFC was at peak. So these people wanted to open the company and they also wanted to do it. But unfortunately, there was a scam and DHPL was failed. But I told you, you can expect, you can wish, but you should not be greedy. The company also become very greedy one. They want to gulp more than what they can chew and ultimately fail. There are so many companies without basics, without fundamentals. If the company price is going up means there is something fishy. So there is something, yes, which is not visible to the common eye. In that way, they have lost. As I told you, Arshad Mehta scam, nothing was there. Just manipulating the general ledger balance of the Reserve Bank of India. He minted money. He minted money and everybody followed him. Ultimately, what happened? Yes, because I am very greedy, I want to get the maximum profit out of market. I sustained losses. I faced a failure. So they are there. Even the rating is, yes, even for your mutual fund also there are ratings. Every mutual fund, if you go to that business line paper, they are there, ratings are there. But I don't say they are 100% to be trusted. Yes, even for your simple, your Amazon, if you want to purchase an article in Amazon, they will say after your debit card is debited, they will say, what is your experience? Please rate us. How do you rate us? Just by one transaction, they are asking you to rate it. Whether it is a Bookmyshow or Zomato, they say you share your experience. They give a rating 1 to 10. They advise you 1 is low, 10 is satisfactory, 10 is best, like that. So by one rating, you cannot say that this is the best rating. Whoever has done the rating, they are the best company. They may fail. Not necessarily that everybody should fail, but there are chances of failure. The other one is, that is also very good thing. All IPOs are oversubscribed, except few issues. All other IPO shares are quoted below issue price. How to avoid such details? For every IPO, there is history of the IPO. That means company's history. Very clearly they are analyzing. You go to that analysis, read it, and then you can apply for the IPO. Day before yesterday, Ruchi Soya, they have gone for public issue. What is the background of the Ruchi Soya? They have given in the papers, WhatsApp messages, books, and everywhere. They have gone for one-time settlement with the State Bank of India. Again, now they want to buy that company, again with the help of State Bank of India only. The company was financed by State Bank of India earlier. It failed, and some new entrant is there, new entrepreneur purchased it. Now he is going for a loan from the State Bank of India, and they are willing to give. In what capacity can you say this issue is good or not? For example, you take it, Sona BLW. Everybody is skeptical about the issue. Yes, we're also very skeptical. What is this? But once we know that they are supplying for electrical vehicles, they have a contract for next 10 years for supply of electrical vehicles. So finish. Our next future is only electrical vehicles. It was given for 399, if I am right. It has gone to 250 and odd, and again bounced back to 600 during this 60,000 index. it has gone to 700, 800. Again, now it has come to 660, 670. So, IPOs, you should be choosy. You should read the prospectus. And the prospectus is analyzed by the papers and journals thoroughly. Yes. Still, some people will cover so many pitfalls. They may not show correctly. They may not show their weaknesses to anybody. They are there. But ultimately, your reading, that is there. Suddenly, till last day, nobody subscribed. But last day, it was all subscribed. How can it be? When your issue is open for 3 days, first day, no subscriber. Second day, no subscriber. Third day, heavy subscription. That means it is manipulated. Naturally, that will fail. So, you expect reasonable margins, reasonable profits. Don't expect windfall. If you expect windfall profit because Sona BLW has done well or Adani Wilmer has done well, I cannot say. Sometimes they click. Most of the times, it is normal profits only. And with hype only. Because you say Paytm. What was the hype? They say Zomato has gone like this. They have given for 76 rupees. They have opened at 140 and they have gone to 200. It goes to any length. Good. It was good. But what happened? Paytm. It is in the dustbin. With a lot of pressure, slowly it is going up. How much time it takes for a $1,000 rupees to get back? Very difficult. You know about Rakesh Jhunjhunwala. He is the best share marketer. Whatever he says, it is almost a law in the stock market. He has opened one company, Star Health Insurance. What happened? We respect his wisdom, but as an entrepreneur, it is a failure. I also subscribed to Star Health, but what happened? It was the only subscription. It was the only IPO which could not be subscribed fully. So there are pitfalls in the market also. So these pitfalls, etc., we need not face if you go to mutual fund. There they are masters. Of course, master also can fail. That is not a problem. But there are masters. They will look into your portfolio. They look into the economic business cycles. They compare it with the peers. They compare it with the future. What is the future? Future is only analytics, the Internet of Things, business analytics, digital India, digital passport. Everything is digital. Digital university, digital post office. So many things are there. Digital vehicles. In the next 10 years, not less than hundreds of jobs will be disappeared from the circle, disappeared from the market. Jobs I am referring. You need not go for a driver. You need not go for a valet parking. You need not go for studios. There are drones. There are electrical vehicles, etc. So, yes, for IPO, one should be careful and see and read the prospectus of the IPO, and you can subscribe. Any more?
Yes, sir. Those were the questions compiled. Yes, sir. Those were the questions, sir.
Only 2 questions.
Any further questions, Monica?
No, sir. Those were the questions compiled from the members.
Oh, that's it. Do you want to say anything, sir, from your side? Can we?
My side, yes. Market is a very beautiful thing. You can enter anytime, but don't expect tomorrow I want to get my profit. It is not that simple. You have to work for it. And as I said, long-term planning. You have to wait for 10 years. Certainly, it will be better than your bank interest. Certainly, it is better than your NSC interest or any government bonds, etc. You get very good appreciation of your stocks, but you hold it for 10 years. And one more thing, never expect your money will come tomorrow. Don't expect. Yes, on 15th March, my son's marriage is there, or daughter's marriage is there. On 14th March, I want to dispose of and get money. It will not be given. Whenever market is good, you dump your stocks. You get your money, keep it safe. It will not be helpful at the emergency of you, but it will give you money. Only thing is you have to time it. Yes. Next year I want to go for construction of house or purchase of house. Before 1 year, you see how the market is going up. If you are satisfied, if it reaches your threshold limit, if you are getting enough profit, dispose of, keep it separately and go for construction of the house. But unfortunately, only when they construct day after tomorrow, they want to sell today, which is unreasonable. But the market, you cannot expect such type of awareness or readiness. That is my sincere request. Because since 92, I was in 82, I was in the market. Yes, I have seen ups and downs. And the most horrible times I have seen. Most highest falls on the BSC Sensex I have seen. But whenever market is good, you encash your mutual funds or shares, etc. And whenever I need money, there is money. But not day after tomorrow, I don't get any profit. That is the advice I sincerely give it to everybody. That's all.
Thank you very much, sir. It's a much useful session. I think on behalf of ICAI, I convey my sincere thanks to the session speaker, Maheswara sir. I think Maheswara sir given a lucid explanation on the investor schemes. What are the grievances from the small investors? The methods of investments like monthly or how to manage your investments. See, keeping in view your requirement, future requirements. I think you have explained very well, sir. Thank you very much. I think it's going to be a much useful session for all the viewers of the today's session. Thank you very much. Have a pleasant day, sir. Thank you.
Thank you, sir.
Monica, anything I want to present to sir and any?
Sir, as of now, there is no question, so we'll end the session, sir. Thank you so much, sir.
Okay.
Thank you so much for your time.
Thank you, sir. Thank you, Maheswara sir.
Before saying goodbye, I want to thank the Mastan Garu, Naresh Garu, and Mr. Reddy Garu Meeru. Andhra kuda, your Monica and
Thank you, sir. Thank you very much, sir.
Thank you all.
Thank you very much, sir.
I am very much
wherever required, definitely we'll take your help, sir. While planning these sessions like Mr. Awareness programs for any branches also, definitely will come to you.
Certainly, sir.
Thank you, sir. Thank you very much. Pleasant day. Thank you.
Right.
Thank you, sir.
Right.